The Bank of England and mortgage interest rates for July 2022. Is there going to be an increase? Well, that's a great question, and it is one that I posed to Simon Hudson, our mortgage broker. Well, welcome back to the July episode of the property housing update and mortgages as well. Welcome back, Simon.
Good afternoon, everybody, or good morning or evening, wherever it is you are and what time zone you're watching in even.
For everyone watching this video, just a quick update that Simon represents Funded, a mortgage broker. So if you want a mortgage, the links will be below this video. So have a look at those mortgages and get the right deal for you. Let's talk about interest rates. Of course, Simon, we had this bump up from mortgage interest rates going from 0.75 to 1.25%. Do you want to give us a bit of an appraisal of what's going on with the world of interest rates?
Yeah, absolutely. Okay, so last interest rate or Bank of England Monetary Policy Committee meeting was in mid-June. They decided to raise rates by 0.25%, but it will be worth noting that of the 9 members, 6 voted for a 0.25% increase. 3 actually voted for a 0.5% increase. That's 50 basis points. And we need to keep that in mind. The next meeting is in August, and that's when we will see how and if they're going to raise rates in August. And do keep in mind, potentially, that on the table, they're talking about a 0.5% potential coming in August. We don't know that yet. And that will really fall upon the back of inflation figures that we're going to see coming out in July and in August as to how and if they're going to tackle that. But yeah, that's currently where we are. Bank of England base rate at 1.25. Don't forget, though, that lenders borrow money to lend out to us investors on what they call a swap rate, and currently swap rates are for 5-year fixed rate money for banks to borrow to lend out to us somewhere in the region of 3%, a fair bit higher than the Bank of England's published 1.25. What that effectively tells us is that on a swap rate, effectively banks are looking to exchange with each other a variable rate and a fixed rate. It's a lot more complicated than that. But what they're effectively betting is that 5-year fixed rates and money in 5 years' time will be a fair bit higher than the Bank of England base rate as it sits at the moment. That's a very hard one to call and ask, but yeah. So that's why you'll see rates increasing on lots of lenders' products over the coming days and weeks.
And do you think, Simon, I talk about mortgage interest rates where we are right now, is it better for property investors and landlords to tie in their mortgages? Is it now a good time to review all their mortgage products, try and fix those rates in? Because you mentioned earlier that rates will increase. So is it not a good time to start fixing those prices in?
Absolutely, yeah. So I guess what we should kind of start out with, that this isn't individual mortgage advice for anyone out there. You do need to reach out, and same goes with tax. You need to reach out for an individual consultation. However, yes, definitely the norm at the moment is to try and take as long a fix as you can, 5 years. Try and pick a lender that will allow you to do a further advance. So effectively, you can do a mini remortgage in the middle of that 5-year period. So you're not penalised for committing to them for 5 years. And then that way you've got the best of both worlds. But they are, yeah. In fact, 2-year fixed rates are hardly any cheaper than 5-year fixed rates currently.
Okay, perfect. Well, hopefully, if you do need a mortgage, make sure that you reach out to Simon. The mortgage link will be below this video, so make sure you go and reach out to Simon. But thanks very much for the interest rates update, Simon.